Hey guys, it's Matthew Trades Effects, and I'm here with my first YouTube video. So today we're just gonna go over real quick how I caught a 33-yard trade using ICT concepts, trading the Aussie AUD versus the US dollar, and we're gonna only be using MT4, Hugo's Way demo account LTD. We're gonna be using TradingView AUDUSD, as you guys know, and we're also going to be looking at the calendar for today. So today we had pound news around 2 a.m. London. We had CAD news around 8:30 a.m. New York. We had AUD news around 9:30 p.m. We also had news on the NZD at 10 p.m. And on Forex Factory, I like to filter my news where it's only orange and red folder news, and all that means is orange is medium impact and red is high impact news. So that's all I want to be seeing, because these are going to be nice little manipulation moves intraday that I can use to assist my overall trade for the day. So before we start, I just want to say everything that I'm using and showing you guys right now are ICT concepts. I'm gonna mute my phone. All I'm using is ICT concepts, no other trading styles, just ICT. I'm not a financial advisor, of course. We all know that. And I'll be using a demo account and TradingView because I don't like to show live funds. I don't trade live funds on in public. So for educational and for video purposes only, we're going to be using a demo account, Hugo's Way Ltd. Okay, so let's do the analysis rundown. We're going to start on a monthly chart. First, as we see, we had a low set back in March of 2020 around COVID manipulation. And then we had a high set in February 2021, last year. So I'm going to frame the monthly off of this high and this low. Okay? Okay, right there. So from this low to this high is going to be my monthly range. Okay? And if we grab a fib and we measure from bottom to top, we can see that we are trading above the 50 level. And all the 50 level means, if you have a price move, this price leg, we're going to measure for a premium and a discount market. So right now we're above the 50, so we're going to assume that, well, not assume, we know that AUD right now is in a premium market, which means that we're looking for sells. Okay, that's all that means. So I'm gonna draw that out in red. We're looking for sells, and then 50 and below, we are looking for buys. Not necessarily saying that once we get into this level, sorry, just want to change this color. How would I do that? Right here, let me change this to like a blue color. Okay, so right there. So from this low to this high, that's our range. Above the 50% of this range, we have a premium market. So I'm going to be looking for points, well, price levels in the market where I want to be a seller. And then once we get into a discount market, I'll be looking at price points to buy. Okay, it's just that simple. Monthly chart, nothing really too crazy. So leaving our fib on just to delineate the 50 level, I'm going to draw out some places where I would want to sell on the monthly chart. Actually, no, we're going to use the weekly. I'm sorry. So we're just framing this on the monthly chart. Not, it's just that simple. Yeah, so yep, right here. Oh yeah, I also wanted to show you guys this on the monthly chart. Yeah, sorry. So we see that we came from this. So we're in a premium. So we're looking for selling confirmations, as you would say. Oh, sorry guys. So we have a FVG, or as I know it as a fair value gap. Sorry for that. We have a fair value gap right here that we seen price trade into last month of April. So we traded higher, clearing liquidity into a fair value gap in the market, which is just from this point to this point, there was no buy side offered. So once we got in there, that's a really sweet spot where price can just reverse. So last month we traded, boom, we take the low of this up candle. So when that happens, we consider this up candle a bearish order block. Okay, if you guys know ICT, he introduced bearish and bullish order blocks, which is just the last up candle or the last down candle in a price move. So we're going to copy this. I like to have all my lines very precise. So the bottom end, the open basically of this up candle came in at 72594, and then new month started, we traded right into it. The high on that candle is 72658. So not perfect, but less than a couple pips. That's pretty close that you're gonna get, you know what I'm saying? So prior on the monthly chart, we have that delineated. We're in a premium. We came from a fair value gap. So bearish order flow is intact. So the next possible area for a bearish signal will be this up candle, down move, considering this a bearish order block, trades up into it, and as you see, price is now going lower. So that's our analysis on the monthly chart. Now, dropping down into a weekly chart, what do we see? We see this candle here. We tapped into the monthly fair value gap and we proceeded to go down. We took out this bullish order block here. We took it out nicely. We took out this old low with nice move. Then this weekly candle, we came up, we tested that monthly order block, nice and clean. Sells will be very nice here, and then we came down. So see, last week we had a nice down candle and we wiped out these relative equal lows, which have lots of liquidity. So when you see like a double bottom or a double top, people are buying. Uninformed guys, they're buying here, right? And they're going to be in profit. So when they're in profit, they're probably moving their stop below here, you know, they're moving their stops up. So once we get into that fair value gap on the monthly chart, look how price just shredded down. They know that they're going for these stops, right? So in that retrospect, we can also say that we took the stops and we could be buying up, right? But you have to remember, let me go back on the monthly chart. We forgot to delineate our, sorry guys, my first video. We forgot to delineate our premium arrays. Our discount. Sorry, our discount levels. Sorry guys. So what can we see? We have this down candle, up move, broke the high. So we're going to consider this a bullish order block. And then we also had a high here that got taken, and we left a fair value gap here. However, we traded into that fair value gap. However, if you grab the fib again, sorry, the 50 level is here, the high end is here, it's still above the 50, so that's still a premium market. So we have to come below the 50 to buy back up. So I'm gonna erase this level here, and we have our two levels here below the 50, so in a discount on the monthly chart. So in a long-term perspective, we're either going to the bottom end of this fair value gap or eventually to this bullish order block here to see buying. If not, we're gonna take out these lows. But this is the monthly chart, so that's a long term. Back to the weekly chart. We take out these lows. I want to still see price head down to this bottom end of the fair value gap that we outlined. So on a weekly perspective, I see a bearish point that I can trade from, which is going to be this low. That's going to be my first point of where price can see a bounce. Right? I like that level because we already tapped into the monthly. So once we broke this, just following institutional order flow, if price comes back into this area, they'll sell off again because we sold off on this monthly order block, bearish order block. Okay, so that was my first level of interest. My second level of interest was this old low back here. This old low. If we want to continue higher, and then we had this 2-bar bearish order block low. We can take this off on a weekly chart. We have that low, and then our next point would be this bearish order block. Okay, and then you can also put the low, but I don't keep these on my chart. I just, if one is above and one is below, I'll just keep it there. If one gets traded to and starts to go the other way or continue that into that direction, I'll remove it and then add the next delineation. So if this low got blasted through, I would look for this level. If this level gets blasted to this level, and vice versa. Okay, so I'm bearish, and I'm looking for bearish points in the market where price can go down. So ultimately, we're looking for the 66880 level, and yeah, that's where I'm predicting price to go. So heading down to a daily chart. As we see here, this weekly level, we can see we tapped into it here and we tapped into it here and here, right? But what I also seen once I scaled down is we had this 2-bar up, then a down move, making this a bearish order block. So if I grab that, put the levels in, I can now say that this is my level that I want to, either these two levels, right? But this one being more prominent. So let's see the precision. The high on the low on this candle is 70464. The high on today, or we're a new trading day, but the trade that I took, that I'm still in, but the 33-hour trade, the high on this candle comes in at 70461. So less than a pip. Okay, guys, less than a pip. So if you were looking to trade here today and you would have just traded off of this level, you would have been less than a pip away from Wednesday's high. Okay, and that's how we can call it level. But as we also see on the buy side is a down candle and a move up. So this level right here also becomes sensitive. Okay, even though we're looking for buys, we still have to delineate our discount levels, our buy levels, right? And as you see now, price is rejecting, is going back up. It might take me out. If so, we'll look to trade next week, or maybe even tonight. But that's not the point. We're talking about Wednesday's trading. This bar here, this down bar. So we have a level 69523, and then today the low was 70461. So not too far off, you see? And that's how you can some days call the high and the low of the day, because I want to be a seller here, but I also want to be determining if buyers are going to step in at this level. So that would be my entry and that will be my exit. High, low of today. Boom, precision. Thank you, ICT. So let me read the notes. All right, so we calibrated this level on the weekly to this level on the daily. So we're going to delete that. Now that's our level. So okay, yeah, that's all we had for the daily. So that's what, these are the price points we were, focused on. So let me just put those on the chart. Arrows here, that level, and then we have this level here. Alright, these two levels. Just, you can, these are just off the hand. These aren't the exact level numbers, but just these were basically the price ranges that I was looking at today. So then we hop down into a 1-hour chart. I'm gonna add my daily dividers, and now since we're on a 1-hour chart, I'm gonna be looking for a weekly profile, right? So basically what that is usually Monday we'll trade in consolidation. Tuesday we'll set the lower high, the low, or high of the week. If not, Wednesday will come, take Tuesday's high or low, and then create the high or the low of that week. So we either can have a Tuesday high of the week or a Wednesday high of the week, which this was the profile I was looking at today. So I seen Monday we traded lower under this low. Right? Everything has to be precise. Right? We tapped this low and we continue to go higher. So this was a manipulation. As you can see, three large candles. Manipulation. Going for whoever was long here, they probably put their stops here. So there's sell side liquidity under here. Right? We go higher. When Tuesday we continue, we rally out of London and we create a New York reversal, right? But look how it misses the daily level up here. I'm gonna change this color and have it delineated as such. So this is the daily level that we're looking at, the bearish order block. And we're also going to delineate this as well as the bullish daily order block, where we were taking profits at for our main objective, right? So as we've seen, Monday we took stops, we ran higher. Tuesday we ran higher in London. New York reversal, but missing this level. So with that being said, I was looking at Tuesday's highs as liquidity, the name of the game. Let's make this precise. Let's make this precise. Boom. I was looking at New York reversal. Okay, if we reversed to New York on Tuesday, whoever took shorts, I know some of you guys probably did, on Aussie in New York on Tuesday, they have their stops above here with another confluence that we still have to tap into this daily order block to go lower. So let's get this. So we're going to delineate this as the stops, buy stops. Let's put that there. Buy stops. We're going to put that there, buy stops. And in retrospect, this was Tuesday's high of the day. So everyone usually knows that highs and lows of the day, the week, the month, the year, the quarter, they have lots of liquidity above and below them. So it was just made sense to me that we can take out liquidity, giving price power to go down, and then tapping into bearish institutional order flow, which was the bearish order block. It just, the confluences were just all there. So on Wednesday started here. Asian session, we ran the stops on Tuesday's high, ran them, tapped right into it, less than a pip away. Boom, ran it, and then we continue to go lower. Right? Notice a lot of people talk about breaks in structure. This would be your low, right? This would be your low. Right? And it failed to take this low. So a lot of the YouTube guys would think, oh, we failed to take this low, this is a high that's going to be taken, right? But in but as we see, the high stayed intact. And the reason is because we are basing our trade off of higher time frame institutional order flow. We have a daily bearish order block. We had buy stops above Tuesday's high. Once we run them into this level, price and institutional order flow is just bound to go lower. It doesn't have to go lower, but we're combining lots of what should I say? Lots of we're doing grid analysis. We have stops, we have a level. It's just that simple. We didn't take this low, so we can't consider it a market structure shift. However, with that being said, I wanted to go short, so I was looking at the last up candle before this down move. If we trade back up into the up candle, the bearish order block, we can see price go lower. So in prior to London, I seen this and I'm like, okay, so on the H1 chart, this is where we can trade up to. This is where I'm going to demand my price to trade up to. And once it trades up to there, I'm going to be looking to go short. So that was the H1 chart. Going out to a 15-minute chart, all we did was look to refine the H1, which I did. I traded. I used these last two up candles before this down move. I'm using the bottom end. You could have used this. See the precision on this. Right? Boom. Look at that. Up candle, down move. We trade up into the up candle, bearish order block. The open of this candle came in at 70369. The high of this candle came in at 70369. Right to the pip. Spread had me out down here, down here, but this was only 3 pips off of London high, right? So, and as you see, price came all the way down. It gave us a little consolidation, but eventually we just trended off into London close and then GMT close, open. Look how price delivers perfectly right into the close of the day. So we traded from the high to the low. Sorry, to the low. And that's what we're looking to do as day traders. We don't trade Asia, so we didn't catch this high. But if we did, we would have got the average daily range, the high to the low, based off higher time frames. So that's why higher time frames are very important, guys. This was my analysis on AUDUSD, and what made me get the 33R trade was scaling it all the way down to a M1 chart. Same rule applies. That is that 15-minute level. All we have to do is boom, last up candle for the down move. Tried price trades perfectly into it. As I said, I didn't have the spread, the demo. Got me in right here. Stop loss went above this high. And yep, that was our trade. Entry here, stop loss above here, and then target the daily bullish order block. So high to low. So now let's go into TradingView. For people who use TradingView, I'll just show you guys real quick. Let's mark out those daily levels. they might not be perfect on here. Yeah. So we have the bullish, the bearish order block, and then we also had the bullish one. So those were our prices on the daily. We go down to a 1 hour chart. Sorry, Wednesday was here. Right. Draw these levels out. Boom. We had Tuesday's highs over here, which got raided. I'm gonna put that in as we're just gonna put that in as buy side liquidity. And we're gonna put that on the top. Buy side got taken into the order block, right? This is the H1. We have our ICT kill zones on here. So from 2 a.m. Eastern time to 5 a.m. Eastern time is the London kill zone, and then from 7 a.m. Eastern time to 10 a.m. Eastern time is the New York kill zone. And those are the 2 kill zones I trade. So as you see, Asia, we delineate our line, our bearish order block on the H1 chart, which is here. Then we can scale down to a 15-minute chart, and we're gonna use, see, it was kind of off. Let me see, or was it? No, it was perfect. Remember, that was a bullish candle, so we use the low, the open on that. Perfect. Nicely tapped, and guess what? It taps right at 2 a.m. What a coincidence, huh? 2 a.m. That would have been the best point of entry, and that's the start of the ICT kill zone for London. And then, as we said, we went down to a 1-minute chart, and let me just take that off. You have that 15-minute order block, and then all we did was grab the low end to the high, we dragged it out, right? And then we put this was the setup, short position around here. Boom. Stop was about 2.5 pips above that high. Move that over. And then going back to the 15-minute chart, our intraday target was here, making this a 1 to 33 R trade, only using ICT concepts. I hope you guys enjoyed. It's my first video. I was a little shaky, but I'll definitely be bringing more content. Thank you guys. Make sure you guys follow, like, subscribe, all of that. And I also wanted you guys to follow my Instagram, Matthew Trades FX, and you can also follow my personal account. Yeah, I'm gonna start posting. I'm gonna start posting on this Instagram page, trade ideas, trades. But at the moment, I'm in a development stage, so that's not really ideal. But if you guys want that, I'll start. This was just a start to my YouTube channel, my journey. I'll be sharing my journey on YouTube now, here and there, not everything, because I want to keep my journey close to me, personal. but I also do want to use YouTube as a way to keep me on track and also, you know, break into this community of trading. So, hope you guys have a great day, great night. Remember, keep trading, even if it gets hard. We'll make it one day, sooner than later. Thank you.